Noon, everybody. Today, of course, is the last day of November 2017 in our regularly scheduled webinar. So today I want to do a couple of things. First off, I want to go through the long-term view, and then I want to look at the shorter-term view with all of our resistance levels. And then I want to go into a kind of a follow-up to something that I did last webinar. So anyway, welcome to the webinar, and thanks for being here. Okay, so again, we start with the monthly. Okay, here's the S&P 500. We closed the other day at 2627, so you can see we are about 140 points above the upper band, just still exhibiting amazing strength. For the Dow, it's even more dramatic. We're about 2,400 points above the upper band for the Dow. For the composite, the upper band is roughly 6,200. We closed the other day at 69, so we're about 700 points above that. And then for gold, here we have the long-term view of gold. Again, we've got a long-term horizontal channel here. So we've got now, I guess, 1, 2, 3, 4, about 5 years we've been trading sideways. And then we look at crude. Now, this has been very interesting to me because, you know, one of the things I had been talking about is if crude can get above that mid-band on the long-term chart. Mid-band is 55.71. Actually, the other day, it closed about $2 above it. So now it is back above that mid-band. Now, the implication of this is that now this should really offer support with a possible run back up to the upper band. So this could be a really significant move. By the way, it's not that there won't be turmoil along the way. For example, we'd have to clear this high, which is roughly 62.5, and then this target over here at 108 would be the next target. But regardless, the point here is that we clear that 62.5 handle. You know, this could be a fairly dramatic move for oil. And, you know, with a lot of these beaten down oil stocks, this could be a pretty significant move. Okay. Then we look at Apple. Okay, Apple is above the upper band, closed at 173. Upper band is 148 roughly. So again, still showing incredible strength. Now we hone down to the intraday view. Okay, we hone down to the intraday view. Now, this is the 60-minute chart for the S&P. All right, and a couple of things that are very interesting here. Number one, we took out the last objective, which was 2617.20. And what kind of was mind-boggling to me is that when we blew through that last objective, it actually closed above the next upside confirming line, which is 2626.98. But as you can see here, what's going on, it's getting a little bit overbought short term. We know that because we're trading above the upper band on the 60-minute. 60-minute is still in an uptrend. We scaled down to a 30-minute chart, and we see that it violated the upper band. But again, what's interesting here about this chart is that the 30-minute chart had been kind of flat. The 200 is pretty much equal to 253 for a while. Now you can see it's starting to separate. So we have a lot of strength flying into this market. And then here's the VIX. All right. Again, the VIX, you know, we've been, you know, how do I say this? I felt 1094 should be resistance. Yesterday's high was 1093. Okay. We did slightly take out 938, but it never really violated it significantly. Okay. So that line has really been continuing to act as support. But what's happening now is, I think if we get up to 1250, and it does, obviously that would require a breach of 1094. I think 1250 would still be strong resistance. And then we scale down to a 30-minute chart. Now, if you look over here, what's kind of interesting about this is that the 30 has crossed into a downtrend. All right, the 200 is 1049. 1054 is the mid-band. So it's not very clear from this chart, but nonetheless, it has crossed into a downtrend. And then here's the Qs, because this was the market, you know, the NASDAQ really sold off pretty strongly yesterday. But if you look at this chart, a couple of things of point to note here. First of all, the 60-minute chart is strongly uptrending, okay? And we know that because the 200 EMA is above the 253. And there's wide separation, okay? And even with yesterday's sell-off, I thought what was very fascinating about it is that, you know, you can see the low there is 153.12. The support level is 153.13. That's the line underneath the 156.25, which that objective was hit. Okay, we had been looking for that level to be hit for a while. Finally hit it. Once it hit it, it was like a vacuum. You know, the air was sucked out of the market, and lo and behold, it drops one level. So now we know the Qs have dropped one level. I don't believe, even if it breaks 153.13, it drops below 150. Okay, 150 would be only a two-level drop, which is normal for a bull market. And one level would probably be somewhat normal right now. So it'll be interesting to see now if that holds. And here we look at the 30-minute chart. Okay, it's still in its uptrend. Okay, now the concerning element here is that yesterday's price action did bring it below the mid band. And the one thing I do want to point out here is this. Should the mid band here act as resistance and it moves to the lower band, as you can see, is 150.60, which is right around our major support line. So again, I think, quite frankly, a drop to 150 would be a wonderful opportunity to look for a couple of longs on some of these NASDAQ stocks that have been clobbered. And some of them had some big drops yesterday. And now we move over to the TLT. All right. TLT, all right. You can see yesterday it had a big gap down. Okay, gap down below the upside confirming line of 125.78. All right, and 125 is the support line on the downside. Now, I believe this morning it did take that out. So what we'd be looking for is to see if 124.61 holds. All right, that would be the next key line, because if it does close below that, then I believe that the TLT goes lower. Let me see here. Okay, and then here's the 30-minute view. Now, the 30, even as of yesterday, was still in an uptrend. And we'll look at the current view today to see if it's actually crossed into a downtrend. But, you know, as you know, the 30 is going to cross down or up before the 60. So we'll see what the status is of that live after I close down the PowerPoint. Now we look at the GDX. GDX has been in a downtrend on the 60 for a while. Okay, then yesterday with the drop in the rates, or the rise in the rates, I should say, it gapped down, blew below the 22.66 line. Now, 21.88 to me is a very strong line of support. And I feel that if the GDX does fall under that line and does close there for 2 days, there could be a fairly steep drop. And then here's the 30-minute view. It's somewhat similar to the TLT in that it had been in an uptrend, but it's weakening. It's clearly weakening, as you can see here. And then here's Apple. So this is one of the stocks from yesterday that had a big sell-off. You can see it was down about 360 yesterday. And it actually dropped basically 2 levels. So I believe on the downside, 162.5 would be a very strong level of support. That would be this line right here. Okay. But as you can see, it's dropped 2 levels. So typically what will happen is it'll rally up. If it fails here, then it'll move back down. All right, and here's the XLE. Now, this is the daily chart. And again, this has been very interesting to me because, we were looking to see it. We're monitoring a couple of factors here. The first, obviously, is the midpoint on the monthly chart for the spot price. And that's the WTIC, which, as I pointed out before, we are now above that mid-band. Here's the daily chart of the XLE. The mid-band is 67.74. Yesterday, it climbed back above it. So what happened here is we had the big sell-off underneath it a few days ago. It stalled right at 67.19, and in a few days, it's back above the mid-band. And then here's the 60-minute chart. Okay, so these are the support levels. There's the 67.19. That's essentially where the XLE stopped the other day. You can see it is in a downtrend. Okay, and it has butted up against the mid-band yesterday. I believe 68.75 should be taken out. Okay, now this is what I want to go over. These are some charts that we talked about last week and how they were trying to bottom. For example, here was Buffalo Wild Wings. Okay, and this is the viewpoint from the day before the last webinar. Now you can see a couple of things. I mean, Buffalo Wild Wings had bottomed. Okay, and we know that based upon the ADX. And a couple other factors. I mean, it traded underneath the lower band. Okay, we had this gap. We had 2 gap ups. Okay. And then here's the view on the 60-minute chart where we had the gap up above the upper band. It got oversold. It was around 112, gapped up again to about 140 something. And then here's the viewpoint from yesterday. So what's kind of interesting about this is, let me go back. Here it gapped up to 150, okay? And here was your buy, by the way, got oversold here. Now, this ends on the 15th or the 14th, right? Now we look after the 14th, okay? And you're probably thinking, well, that moves over. Well, look what happened here. Got oversold on the 20th, 21st, around 136. And then the offer came in again, and bingo, it's up $20 since then. So the logic dictated that, this thing would probably continue higher, and it did. Now, here was Fizz. This is one that we went over. And again, what I had been talking about was, let me just see this phenomenon here, where the ADX line peaks out, okay, and starts to head down. And then we start to get positive MACD. The MACD turns positive. And that's what happened basically last webinar, actually prior to last webinar. Here was the 60-minute chart, got overbought here, got overbought here, really the day, right before the last webinar. Now we look at yesterday, okay? This is the view, the price chart from yesterday that I pulled off. You can see where, if you had bought this oversold condition on the 14th, which was here, it made about an $18 move in a couple of days. Got slightly oversold just the other day at 102 and is up to 108. And we'll probably retest that 113 high. Then here was another stock that I showed from the last webinar. This was KMI. Now, here was a couple of things that I pointed out the last webinar. Okay, stock is obviously trending down. We know that because of the relationship of the 200 to the 253. All right, the 200 is well under the 253. And what's interesting here is that the day before the last webinar, we had that really nice little doji bar. So it started to look like this thing was bottoming. And here's the 60-minute chart. You can see that, okay, the ADX line at peak started heading down. Looks like a buy here, okay? And then we look yesterday, and look what happened. There's the little doji bar. It continued down and continued to drift down, all right? And it closed under 17 yesterday. Now, here's the point of significance, okay? We go back to the 60-minute chart. Okay, this had been starting to try to bottom. Okay, we know that because the ADX had peaked out over 40. But if we look at the daily chart, the ADX line was still heading up. So it's still a little too premature to get into this deal. And then yesterday, again, we have a little doji forming late in the day. Looks like the stock is trying to bottom, okay? Now, what would be convincing here to compel you to want to enter this? Because remember, this is definitely a counter trend trade. All the trends are down. Well, the one thing I'd want to see is I want to see this ADX kind of top out and start heading down. Ideally, I'd want to see on the 60 the histogram cross zero and turn positive. And if you wait for that histogram to turn positive, you're usually not too far off on a correct entry. So let's take a look at some of these deals and see what's going on. Let's look at all right, let's look at KMI and see what's happening today. Okay, so now you can see what's going on here. Bottom, it's right back up to that 17 level. Okay, MACD just turned positive. So it looks like this stock is going to really try to bottom here. And it looks like now the correct entry's coming in. Let me put this up here. I don't know why I keep getting this thing to reduce. Okay, here we go. Now here's the daily chart. Now you can see it's kind of interesting because we have all this bottoming type formation occurring here. Now on the daily, what we'd want, the daily just turned positive on the MACD. But what we'd really like to see is this to start curl down, start moving down. And that would confirm that entry. But here's the point. If you come in here, what I like doing is like I'll go in here, and if it appears to be bottoming, you know, buy the stock, sell calls. Even if you did it back in here, you're not too far off. Because as you know, a lot of times it takes a while for these stocks to bottom. Let's look at the other instrument. We had the TLT. Okay, so the TLT is still above 125. We'll see if that level can hold, and it's sitting right at the mid band as well. So that should be strong support. Okay, the GDX broke down. Actually broke down. So that stock, let me just change this. Okay. Yeah, that stock, I'm sorry, that's really a ETF. That should start to head back down. Now, watch that key level. What do we say the key level was? I should probably know these, but I don't have them all memorized. Okay, key level is 2266. All right, so right now we are below that price line. Okay, so if we close below that for 2 days, there's a strong likelihood this is going to be a fairly steep drop. And when I say fairly steep drop, it could drop to as low as, let's take a look here. Could drop down to, well, I would expect about a 10% drop from this level. So anyway, keep that in mind at this point. And let's take a look at a few other things. We had a few stocks reporting today. We had Workday. Okay, so Workday is down slightly, not a real huge move. We've had Jack in the Box. Oh, okay, now here's an interesting move. They reported and reversed. And look at that, it's up about 11 bucks. Now, if I go to, let's take a look at the 60. I'm going to hazard a guess to say that the daily probably has positive money flow. No, it doesn't. This is interesting because this really runs counter to what I would expect. You know, other than bouncing off the bottom band here, did it twice. So it was at the lower band on both the weekly, the 60 and the 30. But look at that rally after that. Now I got to look at the 10 because I'm really interested. Okay, it was underneath the lower band on the 10. Wow, so this is some rally. This was some move after earnings. Post-earnings move was tremendous. And let's see, there's one other that reported that we're looking at, PVH. All right, not much happening with PVH. Let me see. ADS Autodesk, they reported the other day, they were down huge, 15, 16%, and well underneath the lower band. All right. So now we're starting to get that little bit of a bounce. You know, personally, I would wait until at least, you know, it starts to turn positive on the MACD, or wait until it closes back inside the lower band. And that's what happened here. So you got a little couple of point move off that. But if you see it, we're still underneath the lower band on the 30. Momentum is starting to move back into it. So the next level to monitor is the 111.63 price line, which is the lower band on the 30. There was another one that dropped pretty significantly, Momo. Okay, this is kind of interesting because Momo never closed above the high nor below the low the other day. And it opened within the body and just kind of continued to drift down. Yeah, really not showing a lot of strength in terms of a bounce back at all. Kind of gave back all that gap yesterday and more. But, you know, again, if we look at the money flow negative, let's take a look at the 60. And negative. See what it looks like on the daily. Kind of interesting because, and it's negative on the daily as well. So, you know, obviously, you know, if you looked at those 3 different time frames and you saw negative money flow confirming on each on all 3, you would be biased to the downside. But what's kind of interesting is that Jack really went opposite of what you would expect. And I would certainly not have expected an 11-point move off of that gap down. But, you know, again, if we look at Jack in the Box, let's scale down to a 10-minute. Okay. Even on the 10, we never had a close. Maybe this bar here, that little doji, closed underneath the low of the gap bar. Let's see. No, it didn't. That closes 97.45. So it never closed below the low of the gap bar, right, which is a criteria you'd want to see for it to continue down. And considering it's oversold on all three time frames, going long could be warranted with obviously a tight stop. But they must have announced something, because normally you don't see that kind of a rally back after earnings when the money flow is negative. But the money flow is certainly very instrumental in helping you to decide which side of the market to be on. Interesting. All right. Well, anyway, any questions? We're kind of grinding to the end of earnings season, so I haven't really been talking a lot about some of the stocks announcing, earnings. But we continue to have large moves. It's just, at times it's very interesting to me how significant some of these moves can be. Like last week we had that Signet Jewelers. Let's see if they ever rallied back. All right, well, just kind of flatlined. But you can see it's in the process of trying to rally. Let's take a look at the daily. Okay. Now, we have had close underneath the low of the gap bar. But you can see it's starting to try to firm up. The AD exit line has already turned down. All right. So what's interesting about this is you'd want to see if the price holds above the low of that pivot low. One of the other scenarios in terms of trade strategy with a stock like this is to just simply buy a straddle. Because right now the IV, the implied volatility, is probably very low. Go in there, just straddle it. If it breaks down, you cover your puts. And if it does get the bounce back, you can hopefully get your money out of the call side. But ideally, you want the one direction to cover the cost of both. And then you can turn around with basically a free position on the bounce. All right. Any questions, guys? That's what I wanted to cover today. I think kind of following up to some of these stocks that we were talking about last webinar in terms of trying to bottom is kind of an interesting exercise, because you can see how they follow through. Now, here's one that is making a strong reversal right now, and that's ETE. Let's see if ETP is. Wow, look at that. I'm going to have to take a look at some options there. That looks strong. All right, well, look, I don't see questions, so we'll convene again in 2 weeks, I believe. Let me see. We're starting to get into the holiday season. Yes, we'll be able to do one more before Christmas, and then maybe we'll do one between, maybe have one before, after Christmas and before New Year's. We'll see. All right, well, anyway, look, I want to thank you all for being here, and I appreciate your attendance. Have a great rest of the week.